All right, so it's been a minute. It's March. Let me turn this thing up. It's March 18th. I hope everybody's been having a good month. We're gonna talk to you about swing trading management, and I think that's the biggest key to being successful because I've been trading 7 years, and we get into this loop, and I've been there before, trying to find the Holy Grail, and I know you heard it before, Holy Grail, Holy Grail, and we're trying to find the best one that has 100% win rate. And let's be honest, if you've been trading for over a year, you're not going to find the perfect strategy that has 100% win rate. All right. And I've learned for a fact that it's just not, to me, for me anyway, I'm speaking on behalf of myself, it's not possible. All right. So if you've been following a lot of my videos, I trade the daily time frame because I have other stuff to do. And so I'm going to help you out. If you're not profitable on the lower time frames, maybe you should move up to the higher time frame. Now, if you're trading futures, this is not for you. This is only for forex swing traders, the ones who have a 9-to-5 that have been duped into saying, oh, you can have a 9-to-5 and still trade during the day. I'm retired military. I tried doing it. It didn't work. So if you're in that boat of going down the way I did and it didn't work, now I'm profitable, I'm just going to give you a quick rundown, and we ain't going to bore you to death with a slideshow, but we're going to give you a quick, brief risk management plan and strategy. All right, so let's go into it. All right, so forex swing trading risk management. So I'm going to just start off with $1,000 starting balance. Yeah. Whatever you want to do as far as prop firm and all that good stuff, that's on you. You know what I'm saying? So if you have more than $1,000 balance, it's up to you. So I'm just going to start off for shits and giggles today, forex risk management plan. All right. So if you look at it, starting balance is $1,000. My trade style is swing trading. I'm going to only take trades on the daily time frame. Maximum risk per trade, 1 to 2% account balance, and my target is 2 to 1. All right. And I'm going to show you some tips and tricks and another video of how to go 1 to 2 and hold and be confident that it's going to go in your direction. All right. Risk per trade. Yeah, I know right now 1% to 2% is 10 to 20 bucks on $1,000 account. If you want to put more in there, you know, if you want to put 5,000, 10,000, or you want to go prop firm route, that's on you. All right. I'm just showing you today about, don't look at this money value right here. I'm just showing you exactly how to be profitable because honestly, it's all about discipline and risk. The most of the time we lose trades or you lose an account or you blow an account is because you're not disciplined enough to stay within your risk parameters. All right. Trade setup criteria. Enter based on technical confluence or however you trade. If you want to follow my trade, I go off of technical confluences, i.e. support and resistance, movement averages, Fibonacci retracement, yada, 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 trend line, candlestick patterns. Whatever you want to do, that's on you. All right. I trade the 20 SMA. All right. 2 candle lows, 2 candle highs. All right. So number 4 is position sizing. You know, the formula is position size, which is lots, equals risk per trade, stop loss, and pips. And pip value example, I use the 5-period ATR. And I'm going to go break it down a little bit more as we go along. All right. Risk is 10 bucks. Stop loss 20 pips. Pip value for Euro USD is 0.0001, which is $1 per micro lot. Position size 10 bucks. 20 times 1 equals 0.05. And I'm going to tell you, it's a lot easier. You don't have to do this in your head. If you're brand new and you want to learn on a daily time frame, you can go to my FX book. And they actually have a matter of fact, let's do this. Let's go over to my FX book so that way you're not in the blind on this, right? All right, let me see if I can remove this. All right, and let me go over here, share my screen, my window, and boom. And let's pull it up. All right, so you can go to myfxbook.com. Go to position FX calculators right here. All right. And then you can go to position size calculator right there. All right. What I do is just go Euro USD, pick whatever one you want to go into. All right. And then let's just do one. Oh, my goodness gracious. Later. All right. 1,000. Oh, I'm sorry. 1%, 1,000. And let's just say you're going 100 pips, you know, because the daily time frame. All right, calculate. All right, that tells you right there. The 0.01. That's your lot size you need to use if you have. So look, if it's 80 pips, all right. So same thing. All right, 0.01. All right, 1%. So if you have, let's say you go 20 pips. All right, the units right here now is 0.05. All right. Pretty simple, plain and easy, right? Pretty simple, plain and easy. Now let's pull this back up. Let's pull this back up again, and let's get back into our handy dandy notes. All right, where did we leave off at? All right. So remember myfxbook.com. All right, position size calculator. All right, trade management rules. Always use a stop loss order. I don't care what nobody else say. Y'all do what you want to do. I particularly use stop loss order because when I get into the market, I know, okay, I'm risking this much. I don't want to come back 3 days later and I've lost more than I wanted to lose. All right. That stop loss order always protects you. If you're not going to stay on the chart, now I got it if you swing, if you are scalping, whatever the case. But if you're not physically on the chart watching it at the time you're trading, you need to put a stop loss order in. All right. Move stop loss to break even once the trade hits 1 R. And you can switch to Heikinaishi. That actually tells you if it's going to keep going, it clears out the noise. But once you're at a 1 R in profit, if it's a good trend, you feel like it's going to keep going up based off the Heikinaishi or your strategy, move to break even. All right. If it ends up going against you, that's fine. You're at break even. You won't lose anything. Might be a couple dollars for transaction fees, things of that nature. All right. Secure partial profits are 50, 75, 2 or higher. Me personally, I do 1-to-1s because I trade over 10 pairs. So I do 1-to-1s. So I get in, get out. All right. No revenge trading after a loss. All right. Revenge trading don't really matter when it comes to it's not. I ain't gonna say it don't matter, but it doesn't affect you as much because you're trading on the daily time frame. So it takes a few days for the trade to play out. And so if you lose that trade, you're probably in another trade already based off your risk that's going to cover that loss anyway. All right. Number 6, risk control measures. Daily risk limit, no more than 3% of your account balance at risk. So just the food for thought, right? If you have a big account and you want to risk 500 on one account, on one trade, right? Because you believe in that trade. If you take another trade, you can't do 500 again. You have to go down to like 165. And then if you take another trade, you have to go down to maybe 125, 75 bucks. You know what I'm saying? You can't do 500, 500 unless you have a big enough account. All right. And, you know, me personally, if you have a $100,000 account of your own personal funds, you probably wouldn't be watching me anyway. All right. Weekly drawdown limit. Stop trading if the account reaches 6% drawdown in a week. All right. So that goes more of on daily time. The daily traders. But this can happen. You might end up taking 3 trades you thought was going to go in your direction. And next thing you know, you down 6%. Hey, if you 6% that week, come back the next week. All right. Reduce position sizes. Once you come back to trade, this is where it says reduce position sizes if consecutive losses occur, because you got to build back into it. Don't go grab some more money, put it back in the market in your bank account, and scale back up to where you were. It might take a little bit, but it's fine. Trading journal, performance review. Maintain a detailed trade journal tracker. All right, that is going to help you be successful. Me, I use my Discord or I use my PowerPoints, and then I do a PowerPoint slide, and I post them in my Discord every month, and I put what I did wrong, what I didn't do wrong, things of that nature. You can put your entry and exit points, reason for the trade, risk reward ratio, profit loss amount, psychological notes, and review trades weekly to identify patterns and improve strategies. I'm like I said, I'm former military. I always believe in revamping your foxhole. We used to call, I forgot off the top of my head, but it always said, we say improve your foxhole. All right. Never get too comfortable with your foxhole. We ain't saying switch strategies. What we saying, you do have to adapt and overcome to this market. You know, everything is not going to be mechanical. All right. You have your setup, but you might see, okay, boom, this happened. Okay, now I know when I see this, I know what to do it here. I know this is my setup if I see this. You get what I'm saying? And a trading journal helps that. All right. The trading journal helps that. Number 8, psychological and emotional control. Stick to your plan and avoid impulse trading. I'm telling you. You might see a breakout of a trade. You think you lost. You think FOMO set in. You think the trade is leaving without you. Trust me. Stick to your plan. Don't just jump in any trade because you think that it's going to go that way. You got to make sure it hits all the blocks. All right. Take breaks after losses to maintain clarity. If you lost a few this in the month, if you're down for that month and you're the second week, third weekend, hey, just take a break. Come back the next month. All right. Trade only doing optimal market conditions. All right. And so that's more of the lower time frame. We specifically speaking on the daily time frame and the higher. All right. But if you see, it can also go with the daily time frame and higher. Because if you see a setup, a 2 candle low, 2 candle high, and the wicks is looking ridiculous, all right, just stay out of that one. All right. Leverage and market management. Number 9, recommend leverage 1 to 10 or lower to minimize risk. All right. Keep margin levels 75 to avoid margin calls. Always. That's what comes down to don't over leverage. That's what that my FX book is for. All right. And avoid over trading and ensure proper capital. All it is about growing your capital, but saving your capital as well. All right. Don't look at, I want to get rich overnight. And I know you've heard that. And I know you want to hear it. And I know you get influenced by all these Instagram, YouTube guys that I made 75K overnight. I made 300,000 in 1 week. You're probably not there yet. I'm not saying that it's for real or it's fake. What I'm saying is you're probably not there yet. So look at what you're getting. All right. If you can't make $10 in the market, you're not going to be able to make 100, 1,000, 10,000. The more money you have just doesn't make you more profitable. All right. Growth strategy. Compound profits by increasing risk per trade gradually, staying within the 1 to 2%. Here's the deal. The more capital you have, the better the 1 to 2% is. If you're only trading on $100, 1% is not going to be, 2% is not going to be anything. So that's what causes you to over leverage. All right. Withdraw a portion of your profits once the account reaches a milestone, like 2,000, 5,000, etc. All right. Diversify into other assets once consistency is achieved. All right. Everybody wants to get rich off forex, but nobody's ever telling you that when you make money in forex, it's okay to diversify into something different, i.e. real estate, i.e. putting into the business you have, i.e. If you're doing videos, getting a better camera, whatever the case may be. Diversify. That's what makes you become financially free. And conclusion, follow the risk management plan will help you maintain consistency and protect capital while growing a small forex trading account efficiently. Make sure, I know we got kind of far in this game, 13 minutes in. Make sure you hit the like button. If you like what you heard so far, make sure you hit the subscribe button, the like button, hit the bell for notifications so you'll be notified when I come out with more videos. All right, so let's go into our the trading strategy. All right, let's move this out the way. Player. And let's get to the meat and potatoes. All right, let's pull this up on the screen. All right, so far this month, we looking at, so I have my February trading list. I always move it over here, but I also have my top trending forex pairs. All right, the most safest pairs. So if you're not organized, it's going to be really rough. All right, I've done a lot of back testing, and so I'm looking at my trending pairs that I trade: Euro USD, GU, USD JPY, USD Chef. That's my slower pair. My trending pairs, strong technical movements, AU, EJ, AJ, NJ. All right, my all dependent pairs is UCAD and gold. And I have actually not gold. What is this? Where is my hold on, player? Where is my other pair? Oh, it's on the other one. That's why. All right, so pretty much plain and simple, right? Let me go to this one. All right. So this is the beginning of the month. March, I started a new canvas. Like I say, if you've been following me a while, you know that's the new canvas. So here's the deal: 2 candle lows right here for a buy. All right, I got to make sure the higher time frame is if you have the daily and the weekly in confluence with everything together, I take the trade. Keep it plain and simple. I always use the KISS method. Keep it simple, stupid. All right. Let's not but what if the generator or the precipitation hits the wind at this velocity? And we don't need all of that. We don't need all of that. So all I do is look, all right, 2 candle lows, all right, 1, 2, not touching the EMA. I look at the 5 period ATR or smoothing RMA, and look what I do. 1, 2. I look in here, I hover over at 1158, which was 115.8 pips. All right. High time frames are bullish. 1, 2. Let's get over here. All right, let's go into it. GU 1, 2. Come over here to ATRs, 97.1 pips. Boom. Look at that. All right, let's move on. Now keep in mind, this is the daily time frame. So there's less noise on the daily time frame. All right. Look at this. 1, 2. All right, look here. Slide over there. 129.3. Boom. Happened in one day. All higher time frames were bullish. Now, keep in mind, you're gonna lose some, and I'm gonna show you some here in a second that I lost. Look at that. 1, 2. So it came over here, and then it gave me one right here, right? It gave me this one, but boom, negated it. Came back over here. 1, 2. All right, restarted, and I hovered over. 68.1, boom. This one took let me see, took about a week. All right, let's move on. All right, so this one took a nice little minute to play out because this is the beginning of the month. It didn't happen to the 12th of the month. And that's the thing about the daily time frame. You must have patience. Trades will play out a lot better than they would on the 5-minute, the 10-minute, the 1 hour, the 4 hour. But you got to have some patience. Look at that. 2 candle lows, 1, 2, hover over 191.8. Boom. Look at that. Pretty plain and simple. Now we have one that this is a potential for tomorrow. I got to make sure at least the daily and the weekly is together. All right. And I know you're going to ask me, what's this indicator right here? I'm not going to give you that. That's for me. I coded that myself in PineScript. So too bad, so sad. You're going to have to go to the screener to look at that. And if you want to know where you can find that at, all right, go to screeners right here and then look for forex. If not, go to the main screen. All right, let's move over to the losses. All right, oh, these in progress. I'm sorry. Move this. So this is silver. 1, 2. We looking forward to this is happening. We jumped in on the 13th. Today's the 18th. So we'll see if this plays out. All right, so here we go. So we didn't get a nice setup until the 18th of the month for a GBP JPY. Yes, I jumped in early because I feel like this trade is going to hit my 188 pips. All right. And so look right here, 197, but I'm doing 198. 188. All right, let's move on. Now here is no, what's not. Let me see. This is in progress. Why is it down here? All right. So this one's still in progress. Look at this. 73.7. See how easy, and now, like I said, I'm going to show you some losses here in a second. I didn't say see how easy. What I'm going to say is see how simple, and you keep it simple, the strategy is. Keep it simple, stupid, man. It's just the patience and risk management. Risk management and patience and staying on track is the biggest thing. All right, let's move over to the next one. See, now look, when I took this trade, right? All right, 1, 2, look, 54 pips, right? It was all bearish. It just so happened. Hey, look here. 1, 2. It might be going the other way. I'm out of this one. Look, I lost that one. Boom. Now, honestly, let's see. 1, 2. So this was 68. Look, it was all bearish, and it still says bearish. All right. So I take these trades. Boom. All time frames didn't match when I took it. So here's the deal, right? 1, 2, 3, 4, 5, 6, 7, 8. 8. It'll be 8 trades that hit TP and lost 2 trades for the month. You get what I'm saying? You don't have to sit at the chart every single day for 2-3 hours a day especially if you have a job. You get what I'm saying? If you have a job, you cannot sit at the chart 2 or 3 times a day. You can check this chart every day. At 5 o'clock, come in and you can have your pairs, right? You can have all your pairs right here. Boom, boom. Look at all. Go through them. It only take a minute. All you're looking for is a 2 candle high, 2 candle low. All right, and I'm going to bring this up for you. Let's see if we can bring this up for you real quick. And let me pull this up for you. Here we go. All right, make sure you screenshot this. All right. This is for 2 candle lows. Must plot above the moving average to give a trading signal. Use the 5-period ATR when placing the trade to take profit or stop loss. All right. 5-period. When I say 2 candle lows, that means you're going for a buy. 2 candle highs means you're going for a sell. All right. If you've been part of my Discord group or you've been watching my videos, you know the deal. If you don't understand what I'm talking about, you might want to go watch the video that's down below in the link. All right, let's go back to right here. All right, again, we're going to close this out. All right, so this was my list. So what I do right here, I go through all my lists. All right, and when I see something that's a potential, all right, I move it over to my one over here to move it to potential. See, I move this to potential. 1, 2. All right. I need these both to be. So I need the weekly, and the daily to be at least bullish. All right. You get what I'm saying? So this is under the 20 SMA. So I'm not going to take this trade, even though this trade is beautiful. 2 candle high, 2 candle low setup. Look at the weekly. It's not right where it needs to be. So I won't take this trade. All right. So I'll put, even if it goes, the way it needs to be, I don't like it. Don't take trade. Time frames don't match, and just leave it alone. Take it off your list. Booyah, it's off the list. All right, you get what I'm saying? Hopefully this made sense. I didn't want to beat the dead horse like I normally do. Keep it simple, stupid. If you have a 9 to 5, you can definitely use this strategy. And if you like the risk management parameters that I had, make sure you click. Make sure you look in the description or comment down below. Tell me all gas, no brakes, and I will send it to you. But if you join the Discord, then I can give it to you in there without no hassle of messing with your email. All right. Join the Discord. Let me know that you want this this breakdown, and we'll keep it popping. All right. I'm getting discombobulated. It must be time to eat. I just came from the gym. Other than that, y'all have a good trading month. Let's get to the money.